Number 1. Mesabi Trust, MSB, royalty trusts that collecting royalty fees from operations of the North Shore Mining Company, the subsidiary of the Cleveland Cliffs, which is the largest producer of iron ore in North America. So considering that iron prices are getting high, and I don't think that it's going to be changed in the soon future, and considering that loyalty agreement in power, regardless of all the news that you might read out there, the royalty agreement is in place, and seems like just they want to reduce fees for no reason. As soon as the commodity prices raised up, that iron are on a high end right now, and as soon as they are generated more revenue, more profits, they got greedy and wanted to take their share back. But I don't see any actual reasons to believe all the news. All the numbers are pretty solid. We're gonna get to that right now. The chart is yes, it's not on an all-time low, but if you'll have any lower parts, I would catch it immediately for sure. If you can put it even limit orders, but even at this price, current dividends, very good stock to hold and have some passive income. Even if it's gonna go lower or higher, I don't think that much gonna be changed about this iron prices in soon future. As you see on a dividends line, they are pretty consistent. At this moment, their dividends are pretty high compared to the price, and considering all the three last dividends that were in place by the end of last year, $1.42, beginning of this year, January, $1.75, $1.04. So we can assume that if the iron price is gonna stay the same or higher, that would be changed even on the more higher side. So in reality, I think that number of the dividend yield have to be about 20%, around 20%, which is ridiculously high. And I assume that the price might be rising up back to 40s again, maybe even higher, just to kind of keep the fair dividend yield. If we jump into the actual documentation for the last quarter on the balance sheet, everything looks pretty good in terms of the assets and liabilities that I have. If there will be no major changes, royalty agreement that I have, I think that's pretty long-term game with the solid dividends, and if jumping in the right time, I think it's you can lock in pretty good yearly percentage passive income. Let's stock number 1 with the high dividends. Let's move to number 2.
And by the way, guys, if you like the information that I put together, please hit the like button and subscribe. There will be a lot more to come in future on our channel. Let's move to number 2.
Number 2. Ciner Resources Limited Partnership, SIRE, it's formerly Ciner Resources Limited Partnership, is a producer of natural soda ash. It is another high yield stock, which is MLP as well. If you're going to take a look on the last dividends that they have, probably have about $2 yearly dividends. $2. They had some break in, as you see, after that COVID pandemic that we have, all this crazy stuff that was happening with the market. But right now we can see that they are getting back on track, and we might get to the previous levels of the dividends for 56 cents. Let's say just be conservative, have 50 cents, have $2, and in this current levels of $16.85. That would be about 12% dividends per year, which is very high as well. But let's just check their numbers over the last several years. So the dividends was pretty stable until that pandemic stuff happened. So I think we might get back to these levels again. Overall, they're trying to keep up with the distribution to benefit their investors and the unit holders. So with the debt to equity ratio, again, I have to double check an actual website that we are going to do right now. So on the balance sheet, you can check the total assets of 584 millions, liabilities 229 millions. On their debt to equity ratio, looking for about 0.7. which is not bad. Definitely solid balance sheet. Price are like about 55-60% higher than all-time low right now, that I consider as for their balance sheet and everything that I have. It is, and all the inflation that's happening right now too, I think it's the solid entry points. But even at this moment, if the dividends will be keeping up at the same levels, it is pretty strong high yield dividends that you can collect, and maybe with the price appreciation as well, for about $24 or so, about that range right here. But yes, it is something that definitely you can do more researches, and that's stock number 2 with high yield dividend. Let's move to the next one. Number 3, Broadmark Realty Capital Incorporated, BRMK, which is REIT stock. But let's just dive in a little bit deeper in what they are doing. It is a special real estate finance company providing financing solutions generally in the 2 to 50 million range. So it is not like actual regular rate. It's more likely as the creditor that gives the loans for investors and the builders for some projects, and they have a good amount of the loans in place for the next years. And at this moment they are in pretty low debt as well, that I consider really good. So they don't have much of the history, but they have pretty stable earnings, and even if it's going to be a little bit lower due to like higher rates in some future, I think they are in a solid place to keep up with the dividends. Most likely I would say the dividends yield will be reduced because of the price appreciation. As you can see, we have like from the last year that was pretty big drop on all this pandemic. Not the best place to start, but they climbed up back for the 10-11 range, and I think at this moment they might climb up back on these levels too. If you're gonna go over quarterly results on their website, you can check their assets. They have pretty low liabilities and high assets. So if you're going to jump into the dividend history, that they are paying dividends each month, which is pretty cool if you're looking for a monthly income instead of the quarterly. Some people consider having as a good part, so you constantly have little and little instead of just waiting for the drop of the dividends each quarter. So like 7 cents each month per share, like it's pretty solid dividends, and at this moment they're about 13% of dividend yield yearly. I think it's pretty high. They are on pretty low price right now too. Maybe we'll have another revision of the federal notes rates. They're gonna drop a little bit farther, but still I think that's pretty good point for them under their real intrinsic value. They might climb back in some prices, and you'll be not able to lock in such a great percentage basis dividend. So that's kind of stock number 3. Thank you for watching and have a great day.